Good morning, students. Welcome back. So today we plan to cover some more topics for our revision. Okay, so a couple of topics we have planned. One is on the due diligence investigation forensic, and the other one will be about the overview in terms of audits of the PSUs. So both the topics I find to be quite interesting. Yeah, so I'll start my discussion first of all with this topic on the due diligence. All right, so now what is due diligence? What is investigation? What is forensic? Let's try to understand some of these terms because they are not very common, okay, in terms of the discussions that you generally find as around the audits. Okay, so now, first of all, if you talk about due diligence, now what is a due diligence? You can say it is again a process or an exercise which may be carried out for the purposes of evaluation, or you can say for the purposes of review. Now this is not a review which you can say which is in the nature of a limited review, yeah, which is something that you call as an assurance also in the parlance of the discussion that we have had in terms of audit, or when you talk about the reviews, okay, which is limited review as per SRE. So this is not the review. Review means in general terms we are using this term review. Idea is what? In this case, idea is to evaluate the business. For example, let's suppose a company is planning to sell the business, right? So in such a case, what will happen? There will be few investors who will be looking to buy this business. Now, for those investors to evaluate this opportunity means to evaluate this business which is available for sale, they will need some sort of review. They will need some sort of checking. Yes or no? Yeah. So they will also want to evaluate whether this business is profitable or not, whether it has some growth prospects or not, what are the potentials, okay, in terms of the assets which the business is having, what sort of liabilities they are having. Yeah. So each and everything as around the business, this investor may be looking to evaluate, right? So that is where you can say this sort of exercise may be carried out. And generally, when we use this term due diligence, or when we talk about this process of due diligence being carried out, it is used in the context of business evaluation. Okay, so that is a very common phenomena that you get to see. So it's a process. We can say it's a process performed by investors into the details of potential investment, such as examination of operations, management, verification of material facts, right? In this case, what do? You will conduct inquiries for the purposes of timely, sufficient, and accurate disclosure of all material statements or information or documents which may influence the outcome of the transaction. Now, what is the transaction? Transaction is the business deal, or you can say the sale and purchase, which has not yet taken place, which will take place, or you can say which is currently planned. Okay. Now, when it comes to the diligence, so diligence is not only about looking at the numbers. Now, what does it mean? Now, we are not only talking about the financial statements over here. Of course, financial statement will be one of the ways to review the business in terms of its profitability, in terms of its performance, in terms of the financial position which the company or the entity may be having. But This diligence also involves some non-financial aspects. Okay, now non-financial aspects involve largely the business aspects. Means what are the growth potential? Okay, what are the opportunities that this particular entity or the business may be having, or this particular transaction may be having. Yeah. Now this aspect is required to be evaluated, or you can examine in a greater detail. So in this case, as regards the audit, generally what do you see? There is a scope which is defined. Okay, and the scope is all about limited to the financial statements. Over here, the scope is not limited to financial statement. It can extend to anything. So any of the areas may be required to be evaluated in detail. Any of the areas may be required to be focused upon quite significantly, or this approach may have to be changed at any point of times in terms of review of any of the areas. Yeah. So this is how you are required to look at the things when it comes to the review. Now in this case, let's try to understand the difference between this audit and due diligence, through which we will also try to get some maybe more clarity as to what is it that you are doing in this case, which is different from what you do under audit. Now, see, audit, as we understand, is all about examination, evaluation of financial statements. Why? With an objective that is to ascertain whether the financial statements are free from material misstatement or not. So what is the focus? Whether the material misstatement exists or not. But when it comes to the due diligence, over here, it's an examination of potential investment to confirm that anything in relation to that investment, means in that business, in that company, has been looked at least that has been brought to the knowledge of the potential investor. So that's why all the material facts in relation to that prospective business opportunity should have been looked at. Now, will the potential investor want to get into the greater examination of all of those material facts or not? That is going to be the that is again will be dependent on that particular potential investor, whether he will want to get into the details of each and every material factor. Again, that's his perspective. Okay, depending on what he plans to do. So again, we can't say that each and everything which will be brought out, which will be put across, whether that will be examined or not. Generally, yes, but maybe the potential investor is focusing on some of the key things and not on some of the things. But at least everything should be put across, should be brought to his knowledge. Further, it involves reviewing financial as well as non-financial records. Okay, of course, those which are relevant, which are material. Okay, so that's why you can say due diligence is a larger sort of review in terms of the scope and in terms of the evaluation which is required to be done. It's significantly different from what you do in case of financial statements, because when it comes to the audit of financial statements, therein the focus is only financial statements and you revolve around the financial statements only. Over here, financial statements will also be looked at. Yeah, but that's going to be only a part of this particular due diligence. It will not be the only thing like what you have in case of audit. Correct? Now, as regards this due diligence, now what is the importance? See, idea is very simple. In this case, investor wants to evaluate the business. Okay, so that's why anything which is related to the business should not be left out. Otherwise, what will happen? The transaction which will be carried out. Transaction means sale and purchase transaction for the business. One, that may not appear to be favorable, though it may be favorable. Second, maybe the pricing, maybe some of the aspects may get overlooked, which is not appropriate. Okay. If you look at it from a longer perspective for the potential investor, yeah, because he is planning to invest into the business. So that's why he should be aware of all such things. Now, when it comes to the due diligence, now here again, due diligence, as we discussed, is not always having a defined scope. No, you will not have a defined scope for a due diligence always. This may vary, again, depending on the need. For example, maybe the due diligence is focusing only on the operational aspects of the business. Yeah. For example, it's performed by the concerned acquiree. Concerned acquiring enterprise as well, involving an evaluation from commercial, strategic, and operational perspectives only. So we are not looking at the financial aspects. Why? Because the investor would like to understand whether the proposed merger would create operational synergies or not. Okay, so that's the thought. So that could be one of the things which the investor may want to look at, right? Second, there could be a financial due diligence. Now, what do you mean by financial due diligence? In case of a financial due diligence, this diligence will only be focused around the books of accounts, or you can say other information, which is largely towards the financial information as regards the particular entity or as regards that particular business. Okay, something which you commonly see in case of audit as well, but over here the scope will be wider as compared to what you have in case of audit. Third could be the tax due diligence. Now in this case, a separate due diligence exercise may be carried out, okay, which will be focusing around the tax impact or the tax effects in relation to the acquisition, in relation to the transaction. Now, what do you call it this transaction as? Please understand that this terminology, transaction, acquisition, is used in the context of the business which is getting acquired. Okay, and that's what you call as a transaction. Yeah. Or maybe the scope is limited to the review of the systems, IT systems, okay, some of the systems which exist in the organization in relation to the IT. Or maybe it's focused, oriented around the legal aspects. For example, the legal aspects of the property owned by the entity are required to be looked at, or compliance with various statutory requirements, whether those have been carried out, whether those have been performed in the past years or not. Okay, so that could also be the thought process. Similarly, environmental due diligence may be carried out, wherein the focus will be to study the entity's environment, its flexibility, adaptiveness to the acquirer entity. Personnel means it's about the people. So in terms of the policies which the entity is having, yeah, which is largely towards the HR policies, whether those are in line or can be changed to suit the requirements of the transaction or the restructuring. Yeah. So now, as we discussed, this due diligence may be covering all of these aspects, or some of these aspects, or one of these aspects. Now, who will decide that? Now, this is generally decided by the transacting parties. Okay, the investor may be carrying out this particular due diligence, or the investee may be getting it done for the purposes of evaluation of the value. Okay, when it comes to the business valuation, so some of these aspects become important to arrive at the business valuation. Yeah, so from any perspective, all of these things may have to be required to be looked at, or maybe some of these things may have to be looked at. Now again, it varies, huh? So there's no standardized you can say requirement that each and every time everything will have to be done, right? And even in respect of one aspect, for example, if you pick up financial due diligence or if you pick up tax due diligence, now we do not have any, you can say, statutory requirement wherein the scope will then get standardized. That scope within this taxation perspective will have to be decided by both the parties. Both the parties means the acquiree and the acquirer, as to what is it that they are trying to cover. Okay, accordingly the scope will have to be defined. But generally when it comes to the due diligence, the scope is wider as compared to what you see in case of audit. Okay, now when it comes to the due diligence, let's try to understand what can it include. So the due diligence can include any or all of the following objectives for individual areas of verification. Some of these points: brief description of the history of business, background and standing of promoter. See, idea is to acquire the business, so that's why you go back to the history. Each and every aspect around it you'll have to look at. Accounting policies and practices followed by the organization, management information systems, details of management structure, okay, trading results, both past and recent past, assets, liabilities as per the balance sheet, in terms of tax assessment which have been going on or which are pending, cash flow, again a very important area for any investor to look at, brief description of the commercial or other activities, projections. Now this is again a very important aspect. Why? Because this entire business valuation revolves around the projections. So that's why projection is something which will have to be reviewed, or you can say examined in greater detail. Okay. Now, when it comes to some of these areas, now what will happen? If let's suppose brief history of the target company or its background in terms of its promoters, in terms of its KMPs are required to be evaluated. So what will happen? Of course, the team which is going to perform the due diligence, okay, they will have first of all some sort of discussions in terms of planning discussions, that this is what we plan to do with the acquiry, or you can say with the team of acquiry. So generally a team is defined by both the parties, by the acquiry, by the acquirer. Okay, so that's how it works. Let me just quickly flip you through as to how should this be carried out. So practically when you get into a due diligence, so what is it that you do? Just give me a minute. Let me just share one file. So again, when you talk about this process, you will find the operational aspects of this process quite similar to what you have in case of audit. But because there are two parties involved, so that's why it's important to understand this. Let's suppose A Limited is planning to sell the business. Okay. Let me just call A Limited as the acquirer. Okay. And we have B Limited, which is the investor, or you can say the potential investor or the acquirer. Correct. Now B plans to purchase business of A. So now if anything around A is required to be reviewed, so what will happen? Say B has engaged a team, consultants. Okay. Now who can be the consultant? So again, you need to have the experts. So it can be a chart accountant, it can be a firm of chart accountants, and that is not mandatory over here that it has to be a firm of chart accountants. Okay, let's suppose it is PQR and company which has been engaged. So they will perform the due diligence on behalf of what? On behalf of B Limited. Right? So now what will happen is these three parties will coordinate with each other. And when it comes to the reviews, primarily PQR will be coordinating with the team. So A will depute a team for this purpose. And generally what they do is they will also create a data room. Now what do you call this data room as? So you can say a lot of information will have to be exchanged in terms of financial as well as non-financial aspects. So that information is put down separately. And because these are all confidential documents, which is not allowed to be accessed by all. Why? Because it's a specific review, right? So this access is given only to these two parties, B Limited and PQR. So that's why this team will be coordinating with PQR, or you can say B Limited, in respect of the information of A Limited, or you can say in respect of data which will be provided by A Limited's team to PQR. Yeah. So this is how this entire coordination, this entire exercise will be carried out. Right. So eventually when this review will be going on, so there can be physical meetings, there can be online meetings. Yes, these days significantly because the usage of technology has increased. So that's why it's not only about the physical reviews. Maybe a data room is created on a cloud server. Okay, so therein the access is provided to the team of B Limited, that is PQR, and they can just keep accessing the data as and when they want it. And generally there is a time window within which this entire sort of examination or review is expected to be completed. So they will also agree on the timeline, you can say. Scope will be agreed, timeline will be agreed, and that's how this entire process will be going on. Yeah. So again, you can say a similar sort of exercise wherein one consultant will be going to the client place and reviewing the information of the client. Okay, something that you see in case of audit, but over here we do not have the auditor. We have the consultant who is engaged by the acquirer, or you can say the relevant party who will be performing that sort of exercise. Right? Clear? So now, in this case, as we discussed, various areas are involved. Yeah, so each and every area will have to be looked at in greater detail. Okay, so it's not only about overview. Each and everything, whatever this entity may require, whatever the investor may require, they may want to look at. Now, some of the areas which are focused upon. See, when it comes to the assets and liabilities. So over here, when it comes to the due diligence, idea is not only to look at the assets or liabilities which are there in the balance sheet. For example, what is the objective? That any liability should not be missed out. Maybe acquiree has got some liabilities which are not recognized. Okay, so those are hidden liabilities. Idea is to have a knowledge of all of that. Ideally, that should be provided by the acquirer himself. But what if the acquirer is not providing that? That's the purpose of diligence. Okay. So that is what you want to achieve out of this. For example, the acquirer may not show any show cause notices which have not matured into demand. Why? Because they may not be appearing as a liability in the financial statements. And of course, not as contingent liabilities also. So if you don't look at all of these documents, you'll not get to know if there are any such litigations, or if there are any such matters, or if there are any such, you can say, sort of inquiries which are going on, which may get converted into any type of liability on the company. Okay. Similarly, the company may have given letters of comfort to the banks, financial institutions. Now, because these are not guarantees, so that's why, again, they may not have been disclosed in the financial statements of the target company. Target company, again, is the term that you use for acquiry. Okay, so the business which is getting acquired, so that company is what you call as target company, right? Company may have sold some subsidiaries, businesses, and may have agreed to take over and indemnify all liabilities and contingent liabilities of the same prior to the date of transfer. Now, again, how do you get to know about it? So it will require some sort of deep dive into all of these documents, all of these information, to find out if there are any such hidden aspects which are important. Why? Because all of these things can have an impact on the business valuation. And not only on the business valuation, but also on the decision making of the investor. Okay, so that's why they become important. There could be long pending tax assessments. It could be related to direct tax, it could be related to indirect tax, right? There could be future lease liabilities. Okay, in terms of the projections, all of those profits may have been considered, but what about the liabilities? What about the cash outflows? If those have been sort of cut down while giving the cash flow projections, that can have a huge bearing on the decision as regards this transaction. There could be some environmental problems, claims, third party claims, unresolved litigations in relation to the employees. Then, as regards the assets, it may happen that the assets are overvalued. Okay, so idea is to reach the correct amount. Now you may be thinking, but are we assuming that the financial statements are not correct? Answer is yes. Okay, so we are, you can say, not having a complete comfort on the financial statements. That's why this additional, or you can say, this top up is required. So of course audit is done, but investor is not comfortable that despite that audit, maybe some of the things may have got missed out. Why? Because audit has a defined scope, specific scope, which may not have covered some of the aspects which the investor is looking at. Okay. For example, uncollectible receivables. Okay. What if that can have an impact on the decision making in terms of review of the inventory? Okay. Whether that is about obsolete or slow moving, non-moving, all of these things are required to be looked at. Okay. Plant and machinery, equipments which are there. Some of the assets could be litigated. Okay. Some of the properties which are shown in the books of accounts, those could also be litigated. Investments may be carrying a very low rate of return. That again needs to be evaluated. Intangible assets could be there, which may have no value, right? Okay, so now these are some of the aspects that you look at when you get into the financial due diligence. Okay. Now, talking about taxation. So when it comes to the taxation, see, the idea is that you are going to focus upon the taxation part. Okay. So that's the focus area over here. So that is where you don't get into each and everything, but you will focus only on those things which can have some impact on the tax liability. So that's why you will say it will be revolving around the taxation part. And generally, this is towards the direct taxation. Of course, it can also have this aspect related to indirect tax if that is the ask of the investor or the potential investor. Again, it may vary. Okay. It will again be dependent on as to what the investor is trying to look at. Cash flow. Again, a very important part. See, cash flow for any business is extremely important. Yes or no? Why? Because on the basis of cash flows, businesses will be run. Business may be profitable, but what if it doesn't have the cash flow? It can have a problem. Yes or no? Yeah. So that's why business is important. And that's why for this business to run, cash flow is very important to be reviewed. So in this case, what do you check? Is the company able to honor its commitment to its trade payables, means its creditors, to the banks, to the government, to any other stakeholder? How well is the company able to turn its trade receivables, inventories? Okay, so that's inventory turnover ratio is what you evaluate. Debtor turnover ratio is what you evaluate in this case. How well does it deploy its funds? Another very important factor. Are there any funds which are lying idle? Or is the company able to reap maximum benefits out of the available funds? What is the investment pattern of the company and are they easily realizable? All of these aspects are going to help the investor in terms of evaluation of the cash flows which are attached to that particular business. Okay. And when it comes to the due diligence, see, generally the focus of the investor will be on the cash flows from operations. Okay, so when we talk about cash flows, so we look at three types: cash flows from operations, cash flows from investing and financing. No, so the focus over here is operations because it's the business which is focused upon. Yeah, so the business should be the one which should have the potential or the capability to generate cash flows, or which is generating the cash flows, which is now required to be looked at. Financial projections. As we discussed, it's a business deal which is going on. And in respect of this business deal, investor has a potential or investor can see the potential in this particular business. So you can say investor is looking at the future. On the basis of the future, investor is showing an interest as to whether to acquire this or not. Yes or no? So that's why it becomes important for the investor to understand, to find out whether the business has the potential to generate these type of returns or not. In the future, of course, one may say that in the past, the business has been doing this. So can you check that or not? Yes, of course, you will go and check that. But idea is what? Idea is also to check whether the company or the business will be able to generate those much returns, okay, those much profits, those much cash flows in the future or not. So that is also one of the things which the investor is trying to look at, right? So how will that be done? Financial projections are provided. So in this case, the accountant should obtain from the target company. Accountant is the consultant of the acquirer. Projections for the next 5 years with the detailed assumptions and workings. He should ask the target company to give projections on optimistic, pessimistic, and most likely basis. right? All right. So now management and the employees. See, again, this is one area which cannot be ignored. Now, in this case, one must understand the purpose of the acquisition, that is to either draw the synergies or to look at the business potential. And for a business to run, what do you need? You need the management, you need people, you need employees. Okay, so that is where you also need to evaluate about that management or the existing management, existing employee base. Okay, the skill set which the business is having, those people, are they having those skill set or not? Okay, so it is important to work out how much of the labor force has to be retained post this acquisition. Important to judge the job profile of administrative and managerial staff. Yeah, so all of these factors become important. Why? Because you will also like to understand whether you want to cut down on this or not. Maybe the business is too heavy in terms of the employee base. Maybe they've got 400 employees, but actually they don't need that. Okay, for example, if you go back to the some of the deals which have taken place in the past, many a times what do you find? That a business was too heavy on the employee base, particularly when it comes to the PSUs. Okay, they may be retaining a lot of employees which are in excess. Okay, so eventually that sort of restructuring will also be required. Yeah, but all of these aspects will be reviewed, will be looked at before you get onto the business, and that's where you plan to cover that within the diligence itself. Then of course we talked about the statutory aspects as well. Yeah, so all of these aspects are required to be looked at. So work approach, I think we have already talked about it as to how you get on to the work approach. Now, how do you conduct it? You will conduct it basis the information that you will ask for. Yeah. Now, once this diligence is completed, so what will you have? The consultant who is performing this exercise will also come up with a final report, or you can say the outcome. Generally, it's not the one which you see in case of audit report. It's more of a, you can say, some sort of project report, or you can say it's more of in the nature of an advisory report. So that's why its structure will be similar to what you see in case of an advisory report. So there will always be an executive summary to begin with. So now what do you have in the executive summary? Key points, or you can say the key outcome, key areas which the investor needs to look at in a summarized manner. Okay, so generally these are the pointers, so that investor can quickly flip through some of the important areas which needs to be focused upon. Okay, then of course this report will detail out each and every aspect. So then you'll have the introduction, background of the company which has been reviewed, target company, objective, terms of reference, scope, brief history of the company, okay, its shareholding pattern, observations on the review, assessment of each and every area which has been covered within the scope. Now that will again vary, okay, depending on the scope which is there, whether it is about valuation of assets, whether it is about operational aspects, whether it is about taxation. Okay, so that's how it will be covered. And then of course you'll have suggestions on various aspects to be taken care of before and after the proposed merger or acquisition, right? Okay, so now this was, we can say, largely about the due diligence. Let's talk about investigation. Now, what is this investigation? Now, investigation, again, you can say is a kind of examination. Okay, it's a kind of examination. Examination could be in relation to, again, various aspects. Now, over here, what we need to understand is the purpose of this investigation. Because depending on the purpose, what will happen? We will also get a clarity as to what is getting examined, what is getting reviewed. Like, for example, for due diligence, we discussed that a business is getting acquired, and that's where you see this due diligence being carried out. And that's where you understand that its scope will have to be decided, will have to be looked at by two parties as to what is required to be done and how is that required to be carried out. Okay. Now, in this case, this term investigation implies systematic and in-depth examination or inquiry as to establish a fact or to evaluate a specific situation. Yeah. So it's an inquiry into the facts. Professional accountants are often required to investigate the accounts or the related matters or the records of the enterprise. Now, this may be defined as an examination of books and records, primarily to financing or for any other specified purpose. And generally, this is quite significantly different from what you do in case of an audit. Okay, so again, what we will try to understand is how is it different from an audit? See, audit aims at collection of sufficient appropriate audit evidence on the financial statements. Why? Because idea is to express an opinion whether they are free from material misstatement or not. But an investigation requires special in-depth examination of the particular records or the transaction with the objective of establishing a part or happening or assessing a particular situation. Now, important thing is to understand it's a special sort of review and an in-depth review. Okay. Over here, the scope is quite broad. This is quite significantly higher as compared to what you have in case of audit. Yeah. Clear? Okay. Now, let's try to understand all of these points one by one. Now, this can be quite important now because generally there's a lot of confusion on these two. Investigation aims at establishing a fact or happening or at assessing a particular situation. Whereas main objective of audit is what? To examine the financial statements. Okay. To come up with an outcome whether they are free from material misstatement or not. That's it. Okay. Now, scope of investigation may be governed by statute or it may be non-statutory as well. Sometimes maybe again a company or the management may want to get some investigation carried out in respect of some of the operational aspects. Okay, generally it's not done, but it may be carried out. Yeah. When it comes to the audit, its scope is wide, and in case of statutory audit, it's standardized. Okay. Periodicity. When it comes to audit, it's generally annual, right? Except for quarterly or you can say half yearly, which could be required for the company depending on what the management chooses to do. When it comes to investigation, this work is not limited by any specific time frame. It may cover several years as the outcome of the scheme is not certain. Yeah, so you can't really define this in terms of the timeline. Okay. Now, nature. When it comes to audit, it's all about test checking or sample testing. But when it comes to investigation, it requires a detailed study and examination of facts and figures, right? So this is an in-depth review as compared to what you do in case of audit. Audit has got some inherent limitation. Why is that so? Because over here, your objective is what? To look at the material aspect. But investigation, we can't say has got some inherent limitation. Why? Because it's an in-depth review. Okay, so your extent of checking could be to any level. Okay, evidence. So audit is mainly concerned with prima facie evidence, but investigation seeks conclusive evidence, right? Audit is governed by one, of course, because you are looking at the financial statements, so the accounting standards, and because it's an audit, so you are looking at the auditing standards, and of course some legal requirements. Investigation is more of analytical in nature and requires a thorough mind capable of observing, collecting, and evaluating facts. Yeah. So when it comes to investigation, even a third party can appoint investigator, but auditor is appointed by the shareholders of the company. When it comes to the reporting, outcome is reported to the person on whose behalf investigation is carried out. Obviously, you'll submit your report to the one who has asked you to carry out this investigation. Or if there is any statutory requirement, you will go by the statutory requirement. When it comes to audit, so this audit report is provided to the members. You can say the owners of the entity. Correct? Now, what are the steps which are involved in terms of carrying out this investigation? Of course, first of all will be what? You'll have to look at the objective. And on the basis of the objective, what do? You'll get on to the scoping. Yeah, you'll have a scoping in terms of what is required to be done, how is that required to be done. All of these aspects you will cover on the basis of the scope which is there. Next, formulation of the investigation program. Then of course, similar to what you do in case of an audit, you'll have an audit program. Now you'll have a program for investigation. So that program will be assessed, will be created. But here again, we can't say that it's a rigid program. So once you have this checklist, you'll just follow that. No, it's something you'll just keep flexible, depending on the requirements, depending on the reviews, depending on the facts that will come across. You will keep changing it. Okay. Yeah. Then examination and study of various records by reference to appropriate evidence. So that is when you get on to the examination. So wherein you'll pull out the documents, any other information, any other data. You'll have inquiries, discussions with the concerned persons. Okay. Analysis, processing, and interpretation of findings. So once this examination is completed, that is when analysis will be done. Why? Because eventually you will have to come to the conclusions. Okay. So what do? You analyze the information, you analyze the documents, and you process that, and you interpret some of the findings as to where are those findings taking you to. And eventually, what do? You come to the conclusions, which will again be required to be put down in the form of a report. So there will eventually be a report in terms of the conclusions which are arrived at. Correct? Now, in terms of collection of evidence, now it's an important thing. Investigator would be gathering the relevant evidence connected with the matters to be investigated. In the course of examination of the documents and records, investor may require to obtain oral explanations from various personnel of the concerned business. In case his client is a person external to the business, it may be necessary for investigator to get the matter formally agreed to by the business through the client. Okay. Investigator should look for the most convincing evidence. He should seek and examine all the available evidence, and by a process of elimination and corroboration should endeavor to reach at the truth of the matter. He, unlike the auditor, is not to restrict himself to prima facie evidence ordinarily available. He should examine it, and if circumstances demand, should try to obtain evidence that may have to be specifically procured. Yeah. So the investigator can take the help of external experts, persons, related parties outside the organization, valuation experts, to obtain what? Specific evidence. Further, he should ensure that the process of obtaining evidence does not interfere with the regular working of the client. Yeah, so that is again because it's not defined by time, so that's why some mechanism needs to be set up. So when you collect this information, okay, so it should not happen that the client is engaged throughout on this process. So there again, one action plan will be decided. They will also have meetings with the client. So they will also discuss the program of this investigation with the client as to how they will carry out the investigation, what all information will be required, and client will also be deputing a team. Okay, this team will be providing you the relevant or the required information. Correct. Analysis and interpretation of findings. So this I think we have already talked about. Now, what are the important issues to be kept in mind by the investigator while preparing the report? 1. The report should not contain anything which is not relevant either to highlight the nature of the investigation or the final outcome. Okay. Every word or expression used should be properly considered, so that possibility of arriving at a different meaning or interpretation other than the one intended by the investigator can be minimized. So that's why we are talking about the conclusive evidence in this case. Relevant facts and conclusions should be properly linked with the evidence. Bases and assumptions made should be explicitly stated. The reasonableness of the bases and assumptions made should be well examined, and care should be taken to see that none of the bases and assumptions can be considered to be in conflict with the objective of the investigation. For example, in an investigation into overstocking of raw material, inventories and spares, it should not be assumed that the ordering levels indicated on the bin cards provide fair guidance about acquisition of further materials. Okay, so this presumption can't be there. This needs to be evaluated. Also, since the investigation is fact-finding assignment, so what do? Assumption should be made only when it is unavoidably necessary. Okay, so it should not be based on assumptions. It should be again based on the facts. Right? Clear? Okay, now moving further. Now, some of the special issues. See, investigations broadly range between two extremes. On one hand, there are those in respect of which complete accounts, documents, all of these information is available. And the other one, in respect of which little information besides published accounts, statistical data is available. Okay. Now, what are those? Whether an investigator is required to undertake 100% verification approach or whether he can adopt selective. Now that will again be dependent on the scope. Whether he can put reliance on already audited statement of account, generally no, but that will again be dependent on the scope. Okay. Whether the investigator necessarily requires assistance of expert. Now this may have to be evaluated by the investigator. Yeah, so some of these factors become important. Now, special aspects in connection with the business investigations. Now, in this case, what will the investigator do? He'll have to look at the overall business to begin with. Yeah, of course, when it comes to the business, you'll have to look at the P&L, means the financial statements in terms of the performance, in terms of the profitability, turnover, wages, salaries, some of these expenses, okay, which are there in the books of accounts, managerial remuneration in particular. Okay, any exceptional and non-occurring items. Now, this could be important. Why? Because that is where some of the things could be observed which are not really related to the business or which may have some problems. Okay, unusual year in terms of the profitability, in terms of generating the revenue, in terms of maybe a very significantly lower growth as compared to what the entity may have been having over the period. Yeah, discussions or the examination around the PPE, that is about the fixed assets, investments. Okay, so all sort of assets which are there in the business, because all of these financial factors and financial information will have to be used. Now, as regards this investigation, see, as we discussed, that generally it's driven by the statute. Until unless it's something which is non-statutory, which has been initiated by, say, the investor or maybe the entity or any person for a defined purpose. So we'll just try to flip through some of these requirements. Now, statutory is the one which arises out of the Companies Act. So investigation could be there into the affairs of the company by inspector through an order of the central government, okay, or by SFIO, or in some other cases. Okay, so this is arising out of the Companies Act. So Companies Act lays down under what situation you'll have this investigation into the affairs of the company. Or it could be an investigation of ownership of the company, which again is defined by the Companies Act. Okay, so we'll just flip through these requirements as well as to what are these requirements and why are these required to be done. Then we may have some non-statutory. For example, say there is a partnership firm. Okay. Now, a new partner is getting admitted in the partnership firm. So when the new partner will be admitted, what will he do? He will have to induct some capital. And because he will be sharing the profits of the firm on a go-forward basis, so he'll be paying some price to the existing partners as well. Yeah, so that is what you call as business valuation. So it'll be, again, you can say it's some sort of similar exercise that you can see in case of due diligence. Yes or no? Now, in this case, what can this incoming partner require? He may require to evaluate various aspects, business, financial, related to the partnership firm or related to the business of the partnership firm. So how will he do that? So he will get an investigation done. Now, investigation should not be assumed that it will be any government authority which will be carrying out this investigation. No. So there again, you can have a team of consultants that will be performing this exercise on behalf of this incoming partner. Okay. But there again, the important thing will be what? To define the scope. Because till the time scope is not defined, till the time scope is not clear, what will happen? Yeah, so it may not be moving into the right direction. Or maybe there could be some disconnect. Why? Because if this investigation has to be done, this has to be carried out. So somebody needs to be involved, somebody needs to be looking into it. Only then it can be done. Otherwise, it will not be possible. Yes, sir? Yeah. Similarly, the investigation could be for valuation of shares on behalf of the bank. So some of these areas will just touch upon, right? So now, the one for the incoming partner, we just talked about it. For the valuation of shares in the private companies. Now this can again be carried out. Now what is the objective? To find out the valuation of shares as to whether that is appropriate or not. Why? Because maybe one of the shareholder is planning to leave the entity. So that's why before he moves out, he wants to get this valuation done. Okay, so that it can be sold at an appropriate price. So in that case, all of those bases for valuation will have to be looked at. But there again, an expert will have to be hired who will do this exercise. Or it could be carried out on behalf of a bank or a financial institution. Why? Because a company is looking for a loan and the bank is evaluating whether it will be appropriate to advance this loan to the company or not. Why? Because the bank wants to evaluate its capacity to repay. Yeah. All of those factors, all of those exercises which the bank will want to perform. So bank will have an investigating accountant, or you can say a consultant, who will do this exercise for the company. Yes or no? Yeah. Next, a lot of areas could be required to be reviewed in all of these cases. Investigation of frauds. Now over here, when it comes to the investigation of frauds, see, as around fraud, there are auditing standards. There are various requirements that you cover in the Companies Act. Okay. Idea is to evaluate or to investigate into any fraud. So the fraud may have been detected in the company, and that's why the management may now want to get into the details as to what has led to that fraud, who has been involved in that fraud. So that could be one thing. Or maybe the fraud is suspected. So that's why the management wants to find out as to what the problem is, or whether the problem actually exists or is it not there. Correct? Yeah. Now fraud again could be of different types. It could be related to fraudulent financial reported, or it could be related to misappropriation of assets, or it could be related to the corruption, okay, bribery and all. Over here, what is the idea? Idea is to find out. And it's not something which is driven by the statute, right? Over here, the management is getting into it, right? So the management wants to evaluate. So that's why all sort of procedures in relation to the fraud, okay, generally that you perform to find out whether the fraud is there or not, okay, which will require a detailed evaluation, a detailed examination. But over here, what is going to be the scope? Scope is again going to be very specific, because what is going to be the focus? Focus will be to get into that particular matter which has led to that particular fraud. Yeah, so that is going to be the focus area. Okay, so accordingly, this thing is required to be approached. Correct? Then An investigation could also be performed on behalf of an individual or firm proposing to buy a business. I think this is quite similar to what we have seen in case of diligence and what we have seen in case of incoming partner. Largely same. Yeah, but again, the person over here is different. Who's looking to acquire it, but largely the process, the procedure is going to be similar. Investigation in connection with review of profit or financial forecast. Now here again, what is the objective? To find out whether the profits or the financial forecasts are they appropriate or not. Yeah, because on the basis of this, some decision making will have to be done. Okay, then moving further, talking about forensic accounting. Now, when you talk about forensic, what does it mean? It means suitable for use in the court of law. Yeah, it's the application of financial skills and investigative mentality to unresolved issues conducted within the context of rules of evidence. It encompasses financial expertise, fraud knowledge, and a sound knowledge and understanding of business reality and working of legal system. Okay. So now what is forensic accounting? You can say it's an integration of accounting, auditing, and investigative skills. It's a study and interpretation of accounting evidence. Yeah. Usually for investigation and prosecution of criminal acts such as embezzlement or fraud. Right. So now, what are the red flags? Generally, when it comes to a fraud or some of these types of activities, there will be some red flags. Now, what do you mean by red flags? These are indicators or warning of any impending danger or inappropriate behavior. A red flag does not necessarily indicate existence of fraud. However, there are indicators that caution needs to be exercised while investigating the situations. Red flags are classified in categories such as financial performance red flag, accounting system red flags, operational red flags, behavioral red flags. Okay, so that is how you look into it. Correct. Now, forensic accounting can be conducted in order to prosecute a party for fraud, embezzlement, or other financial claims. Yeah. In addition, an audit may be conducted to determine negligence. Right? Okay. Now, let's look at one example of forensic accounting through which I think you will get more clarity. Accounting officer in the pharma company performs a regular reconciliation between the physical inventory counted and the inventory which is there as per books. Okay, so that reco is regularly done. He takes the opening physical inventory as reconciled last month and adjusts the purchases and sales during the month along with any production wastage or shrinkage. He calculates the theoretical inventory at the close of the last day of each month. This time he noticed a large discrepancy and after double checking the figures could not understand why he had a large reconciliation variance. Okay, so now RICO has showed some significant variance. Okay, now to identify the reason for variance, he undertook a review of the quantities of some of the large inventory items. Why? To see if he could identify the variance in kilogram weight terms. He noticed that some large expensive raw inventory items, means raw material, receipts during the month could neither be located in the storeroom or the factory production floor. He tried to trace these receipts to specific production runs to see if they had been used for making the medicines sold during the month. Finally, he reviewed the wastage records to see if these had been discarded due to the quality control purposes. When he received no plausible explanation, he concluded that there is a serious possibility of pilferage of these expensive raw materials and asked the security head to investigate the matter during and after the time of receipt. Investigation led the security people to review the CCTV footage and records during delivery to identify a few instances of short delivery by the inward people. This detailed analysis by the accounting officer was an example of some forensic accounting techniques. Why? To identify a case of accounting fraud. So you can say this is an example of that. Yeah. Right? So over here, we are not looking at the documents or the records. Over here, what is the objective? There is a fraud or a suspected fraud. Idea is to get into that and to evaluate that. Okay. Now, this forensic accounting analysis is significantly different from audit. Okay. Now, in this case, let's try to understand. General public believes that a financial auditor would detect a fraud if one were being perpetrated during the financial auditor's audit. The truth, however, is that procedures for financial audits are designed to detect material misstatements, not immaterial frauds. While it is true that many of the financial statements and frauds could have, perhaps should have, been detected by the financial auditors, the vast majority of frauds could not be detected with the use of financial audits. Reasons include dependence of financial auditors on a sample and auditors' reliance on examining the audit trail versus examining the events and activities behind the documents, because that is not what the auditor will do. Correct? The latter is simply resource prohibitive in terms of cost and time. There are some basic differences today between the procedures of forensic accounting and those of financial auditors. In comparison, forensic accounting and audit differ in specific ways. Now, what is that? So, what are the key elements of audit? We all understand. Okay. What are the key elements of forensic accounting? Significantly different as compared to what you have in case of audit. So this forensic accounting, what you do is in response to an event. It's a sort of financial investigation. Okay, quite similar to that. Finding used as an evidence in the court or to resolve disputes. But when it comes to the audit, it's all about getting onto a reasonable assurance. Correct? Yeah. So now, if you compare this to audit, you can say what is the objective, whether fraud has actually taken place. But in case of audit, that is not your focus. Technique in case of forensic will be investigative, substantive, or in-depth. When it comes to audit, it will be substantive and compliance, but it's limited to samples. Period. For audit, the period is defined. For forensic, there's no such limitation. Okay. Now, off-balance sheet items. When it comes to audit, this can be done. Vouching records will check on a sample basis. But when it comes to forensic, one will get into the regulatory and propriety of these transactions or contracts. Yeah, okay. Now, for forensic, I think as we discussed again over here, we need to first of all evaluate what is the matter, because on the basis of the matter, what you do, you will get into the scoping. You'll get into the aspect as to what is required to be done. Why is that required to be done? Correct? Yeah. So now, forensic professional is always is often involved in fraud detection, computer forensics, fraud prevention, providing the expert testimony. Okay. Now, what is the process involved? See, the process over here will again be somewhat similar, but again, the depth or the extent of checking is significantly different. Here again, there will be a start, there will be a plan to begin with, and of course, a lot of information, a lot of inquiries will be performed, basis which the analysis and the outcome or the conclusions will be drawn. Okay, basis which, of course, final report will be prepared, and of course, on the basis of which then the proceedings will be going on. Correct? Yeah. Now, when it comes to the reports, all of these are written reports. Okay. Form and content will again be focusing on the area or the scope which is covered over there. But over here, generally, you do not get into the assumptions. Yeah, that is an important aspect to be covered here. All right. So I think this is it that we had on this. Now what we can do is we can just start looking at some more questions. Okay, just a minute. Let me just get on to the questions. So let's look at some questions. All right. Yes, so let's look at this one. Okay, so now Quality Limited is engaged in the business of manufacturing and distribution of various ready-to-cook products like vegetable, noodles, etc. Government made certain changes in rules and regulations relating to this sector. Consequently, management decided to go for expansion. Management was looking for some financial investor who can fund some part of the proposed expansion. Mr. Aman is interested in the venture and appoints you to act as advisor to the proposed investment in the business of Quality Limited. Okay, now important part over here is to understand as to what is getting performed. Okay, so idea is for you to find out what is it that you'll have to do. So you have to investigate the audited financial statements, ensure that valuation of shares of the company on the basis of audited financial statements is appropriate. Now the scope is clarified. Good. Yeah. Now what do you do? What process will be used for checking? That's one. And can the reliance be placed on already audited financial statements? So actually, there are two requirements of the question. One, you will have to get into the process. And then, of course, in a way, the question is also asking about the outcome. Outcome means because you are looking at some information which is already audited. So can you just simply place a reliance on that? I think no. I think this is straightforward. Yes or no? Why? Because if you could place a reliance on already audited statement of accounts, then what is the need to get into the investigation? Yes or no? Yeah. So sometimes what you can do is you can find the solution in the question itself. Okay, you don't need to get into the further details. I think in a way the question is giving you the answer also. Yes or no? Yeah. So answer is given, at least to this part of the question. Right? So let's look at this. In the instant case, Quality Limited is engaged in the business of what? Manufacturing, distribution of various ready-to-cook products like vegetable, noodles, etc. Further, management was looking for some financial investor to fund some part of the proposed expansion. Aman is interested in the funding, therefore, what did he do? He initiated. So who is getting this investigation done? Aman. Of what? Audited financial statements, to ensure appropriateness of valuation of the shares. Okay. Now for initiating the same, it may be considered that if the investigation has been launched. Why? Because if the financial statements are audited, but still the need for investigation is there, so definitely there is some doubt in the audited statement of account. And if this investigation is required, so definitely there is no question of reliance on the audited statement of account. Yes or no? So this straight away goes off. However, if the investigator has been requested to establish the value of a business or a share or the amount of goodwill payable by the incoming partner, ordinarily the investigator would be entitled to put reliance on audited materials made available to him, unless in the course of his test verification he finds the audit to have been carried on very casually, or unless in terms of requirements clearly require to test everything afresh. Okay. Now, if the statement of account produced before the investigator were not audited by a qualified accountant, then of course there arises a natural duty to get the figures in the accounts properly checked and verified. But that is not the case. Okay, over here when you say audited, so that means of course it's through a qualified accountant. So that's how the audit system works. However, when the accounts produced to the investigator have been specifically prepared by a professional accountant, professional means you can say a competent person who knows or ought to have known that these were prepared for the purposes of investigation, he could accept them as correct, relying on the principle of liability to third parties. Okay. Now, it would be prudent to see first that such accounts were prepared with objectivity and that no bias has been crept in to give advantage to the person on whose behalf these were prepared. Okay, so this is the approach. You can say these are the steps which become important on the part of the investigator. Right? Clear? All right. So now moving on to the next one. CA Rajpal is performing a forensic accounting engagement involving gathering of evidence in relation to suspected fraud. So it's a suspected fraud of substantial amount in a company. Right? He has been appointed under the terms of a contractual agreement with the company. So who has appointed this? Company has appointed this. Now, company operates in an electronic environment. While performing the engagement, his team has gathered evidence from electronic records in the ERP system, messages in company's email system, and also from the system logs, audit trails generated by the company's computer systems. However, while doing so, the team has failed to take care of the aspects such as keeping the records of each person in the team, gathering relevant evidence, date and time of collection, storage of such evidence. What implications may it have on the forensic accounting engagement? So let's try to understand. Okay. In a forensic accounting engagement, professional undertakes a scrutiny and detailed examination. Now, this is important. Scrutiny and detailed examination of all the transactions and the balances relevant to the mandate so that evidence gathered is suitable in a court of law. Right? That is in compliance with the legal requirements, where it can be challenged through cross examination by the defending party. Okay. It is important that team is skilled in collecting evidence that can be used in a court case, keeping a clear chain of custody till that evidence is presented in the court. If there are gaps in chain of custody, then the evidence may be challenged in the court or even become inadmissible. Okay? Yeah. In the given case, team has failed to keep a record of matters such as persons gathering relevant evidence, date and time of collection, storage of evidence. Therefore, team has failed to maintain what? Chain of custody. It can therefore defeat the objective of what? Forensic accounting engagement. As evidence may be challenged in the court of law by the defending parties and may become inadmissible. Right? So that's why this is an important aspect which needs to be looked at always. Clear? Next. CA Sanjana is acting as credit manager in branch of DFC Bank Limited. A company has approached the branch for a request to sanction credit facilities worth rupees 10 crore for meeting usual business requirements. It is a prospective new client. So it's a company which is looking for a loan, you can say. Now, CA Sanjana checks the past history of the company, background of the promoters, directors, shareholding pattern, nature of the business. Assessment of financial results of the past years and the future projections is also undertaken. So you can say these are the steps which have been taken. She also carries out SWOT analysis of the company. Okay. Besides, assessment of net worth of the directors is also undertaken. Why? Because the bank is concerned that if, let's suppose, the loan is given, so the money should come back. Okay? So that's why directors in terms of their net worth is also reviewed. The status of CIBIL score and position of name of the promoters directors in RBI defaulter list is also verified. Yeah, all of these steps have been undertaken. She also makes discrete inquiries from few clients of the branch engaged in similar line of activity regarding the credit worthiness of the company. Okay, so she's just trying to check as around the company, its promoters, its directors in a discrete manner. So that is also done. Now, based on above, you are required to identify the activity being performed by Sanjana and discuss its nature. That's one. Means what is it that Sanjana has done? Would your answer be different if this activity was to be performed by a person not qualified as a chartered accountant? Can a non-CA perform such activity? State reason. Third, name any three other areas where identified activity can be undertaken. Yeah, simple. Easy to understand, right? Okay, so now let's look at this. First, identify the activity being performed by CA Sanjana. Now, the activity described is the situation of a due diligence, we can say. So it appears to be a due diligence, which the banker has done in a way. Now, what is a due diligence? It's a measure of prudence activity or assiduity as is properly to be expected from and orderly exercised by a reasonable and prudent person under the particular circumstance, not measured by any absolute standard but depending upon the relevant facts of the case. Okay, it involves a careful study of financial and non-financial possibilities. It implies a general duty to take care in any transaction. Okay, then due diligence is a process of investigation performed by investors into the details of potential investment, such as examination of operations and the management, verification of material facts. It entails conducting inquiries for the purpose of timely and sufficient and the accurate disclosure of all material statements, information, or documents which may influence the outcome of the transaction. Okay. So now what does this due diligence involve? It involves a careful study of financial as well as non-financial possibilities. It involves an analysis carried out before acquiring a controlling interest in a company. Why? To determine that the conditions of the business confirm with what has been presented about the target business. Also, due diligence can apply to recommendation for investment or advancing a loan or credit, which seems to be the case over here, right? Now, there would be no difference in the answer if this activity was to be performed by a person who is not a chartered. See, this is not something which is required to be performed by a chartered accountant. Okay. If let's suppose a known CA will do this, this will continue to be called as a due diligence. So it can be performed by any person. Important thing is what? Skill set is required, right? So it's not a mandate to be done by a CA. Skill set is what you need to have so that this desired objective can be achieved. Now, what are the three other areas which the question has asked for where you can undertake this sort of due diligence? So it can be the corporate restructuring, venture capital financing, or public offerings. So these are some of the areas you can say wherein you can have this due diligence, right? Clear? All right, so now I think we are still left with some more, but what we can do is we can take a break now. Okay, so let's take a break and then we'll continue with our discussion. Manish, we can take a break. Yeah, so let's meet after 15 minutes. Huh? All right. Okay. So welcome back. So I think what we can do is we can just continue with those uh, questions first of all, and then we'll move on to the next topic also. All right. So let's look at the next one. During the course of audit of Limca Limited, CA Ranjan observed frequent changes in accounting estimates of receivables. One, okay. Delays in providing information requested by the management, altering, including altered documents. He also noticed discrepancies between companies' records and external party confirmations. These factors made him suspect the possibility of fraud in the entity. Okay. So it is suspected. So there is a suspected fraud. Now, identify the common indications that may alert an auditor to the existence of fraud considering the given situation. That's one. Okay, so that is first part of the question. A, you can say. Also explain the four elements of fraud, often referred to as fraud diamond. Yeah, so actually there are two requirements to the question here. Yeah, so let's understand both of them. The given situation presents several indications that may alert an auditor to possible fraud, which include the following. So what are those? One, discrepancies in accounting records, including non-recording or partial recording or incorrect recording or delayed recording of amounts, misclassifications, etc. Okay. Next, conflicting or missing evidence, which includes missing documents, altered documents, significant unexplained items in the reconciliations, discrepancies between entities' records, and confirmations received. Okay, so this is another one, you can say. Third, unacceptable management responses such as denial of access to records, facilities, employees, undue time pressure to resolve complex issues, unusual delays in providing requested information, denial for use of computer assisted audit techniques, unwillingness to address identified deficiencies in the internal control. Okay. Then you can have other indications. What are those? Accounting policies in variance with the industry norms. See, generally, what do you assess? If let's suppose there's a company in an industry and generally the industry is following a particular accounting practice or a policy, of course, that should be in compliance with the accounting standard. But you'll expect some sort of consistency as against the companies which are into the same industry. But what if a particular company in the industry is following a different accounting principle? Yeah. If let's suppose you find there are frequent changes in the accounting estimates, that again is a problem. Correct? In the given case, altered documentation, discrepancies in records, and the management's delayed cooperation clearly point to above mentioned fraud indicators. Okay. Now, as regards the four elements of fraud, what are those? One, incentive. I want to or have a need to commit fraud. So that's the first element. Second, opportunity. See, for a fraud to be committed, there has to be an opportunity. If let's suppose there's a weakness in the system that a person could exploit. So there again, fraud becomes possible. Third, rationalization. I have convinced myself that this fraudulent behavior is worth the risks. Okay. Fourth, capability. I have the necessary traits and ability to be the right person to commit this fraud. I have recognized this particular fraud opportunity and can turn it into reality. Right? So these are the four indicators that you see. Okay. Clear on this? Yeah. All right. So now moving further. Now what we can do is we can pick up the next topic, and then of course we'll also pick up some practice questions on that, and we'll also pick up RTPs. So there again we'll pick up some questions from there. Okay. So now moving on to the next one. Just give me a minute. All right. So now moving on to the next part. Overview of audit of PSUs. See, when it comes to a public sector company, PSU, therein there are some peculiarities. Why? One, the way such type of organizations work, that is generally in a different manner. Okay. The systems, controls that they will be having, the processes that they will have, and of course the governing body. Okay, means some sort of regulation which is there. Yeah, that is where you find this CAG coming into the picture, which is the Comptroller and Auditor General of India. Okay, which is, you can say, a kind of review mechanism in respect of the activities, in respect of the processes, in respect of the financial statements as well. Yeah. So these are some of the things which you find as becoming relevant, okay, or something which you can relate to whenever you talk about the PSUs, or you can say the audits of the PSUs. So now let's talk about the framework for the government audit. So now in India, what is the framework? So this government audit is performed by independent constitutional authority, which is called as CAG, through Indian Audit and Accounts Department. Okay, so this is the special status which the constitution assigns to CAG, right? So then you have these requirements as around the role of CAG. Okay, so now appointment of CAG by the president, special procedure for removal of CAG only on the ground of proven misbehavior or incapacity, salary and other conditions of service to be determined by the parliament, right? All of those things are there as far as CAG is concerned. Now, which all organizations are subject to the audit of the CAG? So you can say all the union and state government departments and officers, including Indian Railways and posts, telecommunications, public commercial enterprises, which are controlled by union and state government companies and corporations, non-commercial autonomous bodies, authorities owned or controlled by union or states. Then authorities and bodies substantially financed from union or state revenues. Yeah. So you have this different audit, you can say, sort of, which is there for the companies. Now, when it comes to the audit of government companies, there's a special arrangement for audit of companies where the equity participation by government is 51% or more. Yeah. So the auditors of these companies will be what? This will be a form of chartered accountant, but who will appoint that? CAG. CAG gives the auditors directions on the manner in which the audit should be conducted. CAG is also empowered to comment upon the audit report of those auditors. Further, CAG has a right to conduct supplementary audit. So one audit is performed, that is statutory audit by the auditor. Supplementary audit CAG can require and can cause test audit as well if considered necessary. Yeah, of course, these are not the mandates. So these are the top-ups that is assessed by the CAG. So if they feel there's a need, if let's suppose there's a gap that needs to be, sort of taken care of, if they feel there's a need, only then they will get onto this aspect, otherwise not. Okay. Now, when it comes to this audit aspect, so largely you can say it's 3 steps. One is, of course, the auditor auditing, which will then be submitted to the management. You can see the company, which is also looked at by the CAG. And after which supplementary audit or the test audit may also be required. Now, moving further. When it comes to CAG plays a key role in the functioning of financial committees of parliament and state legislation. Okay. So in terms of scrutinizing the notes, in terms of the financial committee presenting their observations, reports. Okay. So these aspects are taken care of. Now let's talk about objective and scope of public enterprises. So in this case, CAG specifies the entities that come under audit purview of CAG at the union and state level. However, scope and extent of audit is determined by the CAG itself. So it can be the financial audit, compliance audit, or performance audit. So the audit of PSUs is not restricted to financial statements. It also extends to performance. Now, what do you mean by performance? Means the efficiency in the business, economy, okay, effectiveness with which the businesses operate, and are they able to fulfill their objectives, the goals which they have set up or not. Yeah, so you can say this is something which is related to the business aspects as well. Yeah, propriety element. This audit is directed towards an examination of management decisions in sales, purchases, contracts to see whether these have been taken in the best interest of the undertaking and conform to accepted principles of financial propriety. Okay. Comprehensive audit. Under this comprehensive audit, CAG do not really cover again the field which has already been covered. CAG will conduct an appraisal or efficiency cum performance audit. CAG will see whether the undertakings have fulfilled the objectives for which they have been established. Okay. It's all about looking at whether the money which has been spent, is that getting any value for the business or not. Okay, whether the targets have been achieved, right? It's more of the propriety aspect in a way, you can say, right? And of course some of the other factors. Now what are the elements of PSU audits? So basic elements, you can say, three parties are responsible. Auditor will be their responsible party, and of course the intended user. Yeah. So now auditor will be the one who will perform the audit. Responsible party means the relevant responsibilities are determined by what? Constitutional or legislative arrangement. Intended users are the individuals, organizations, or classes for whom the auditor prepares the audit report. Now, what is going to be the subject matter? So this will refer to the information, condition, activity that is measured or evaluated against a particular criteria. Okay. So the criteria has to be given. Subject matter information has to be given, basis which the checking or the examination will be done. Right. So the types of engagement could be two: attestation. So in this case, what will happen? The responsible party measures the subject matter against the criteria, presents the subject matter information, on which auditor gathers the sufficient and appropriate audit evidence. When it comes to direct reporting engagement, it is the auditor who measures or evaluates the subject matter. Okay. Now, what are the principles of the PSU audits? See, these are largely driven by quality. You can say audit risk, materiality, documentation, ethics, independence. So, similar sort of principles which you will see in case of an audit. Yeah. So now what do you do when it comes to the audit? Now, as regards the audit of PSU, it's not different from any other audit. Basically the requirements, basically the steps, the procedures, the planning, the assessment, risk assessment, all of those things will remain the same. So what do you do first as an auditor? Of course, you'll plan the audit. Yes or no? You'll plan the audit. So in terms of planning, you'll establish the scope. First of all, depending on the scope, you'll get into the materiality. Then you'll assess as to what are the risk areas. And in terms of the risk areas, what are the significant risks? What are the risks which are not so significant? What are the fraud risks? Yeah, because accordingly you'll plan to perform the procedures, or you can say you'll design the audit procedures. Correct? Which is also, you can say, to a certain extent, the audit strategy. You'll decide, audit planning you'll do, yeah, audit program you'll create, and basis which you will then get on to the testing part. You can say the execution part. Okay, so you'll perform some sort of audit procedures, which could be around the controls, or which could be around the substantive testing, which will also involve some sort of analytical procedures. So all of these things you'll do as an auditor. And eventually what will happen? Once this is completed, you will analyze, and the conclusions that you draw. So you reach the conclusions, okay, which you sort of report then. Yeah. And once the reporting is done, then you'll also follow up in respect of the reported matters as to what is being done year on year. Now, financial audit. Financial audit means the audit of financial statements. So this is about what? This is about the opinion that the auditor will give on the financial statements. About what? Whether they are free from material misstatement or not. So that's the aspect which the auditor will be looking at. Yes or no? Yeah. Now, compliance audit. Now, what is this compliance audit? It's the independent assessment of whether a given subject matter is in compliance with the applicable criteria. So this audit is carried out by assessing whether activities, financial transactions, and information comply in all material respects with the regulatory and other rules which govern the audited entity. Okay. Compliance auditing is concerned with what? Regularity, means adherence of the subject matter to the formal criteria emanating from the relevant laws, regulations, agreements, or the propriety. Now, propriety element is there, means whether the entity or particular business is complying with the general principles which are governing the sound financial management and the ethical conduct of the public officials. So that is one aspect which is required to be looked at. Okay. Now, this compliance audit is generally conducted either with the audit of financial statements or separately as an individual compliance or in combination with performance auditing. Yeah. So either of these ways it may be picked up. Yeah. But in this case, idea is what? Idea is to get onto the compliances. Okay. Whether all of those have been taken care of or not by the entity. Then comes the performance audit. Now, this is something which you see in case of government organizations or PSUs. Okay, of course, in the private companies, we'll see this, but that's more in the nature of an internal audit, or you can say the risk advisory, which is more of an assurance, which is more of an advisory sort of work and not really an assurance project, one can say. Now, what is performance audit? Over here, the auditor is doing an objective and systematic examination of evidence for the purposes of providing an independent assessment of the performance of government organization, program, activity, or the function in order to provide information to improve public accountability and facilitate decision making by the parties with the responsibility to oversee or initiate corrective action. Okay, so that's the rationale, that's the objective. Clear? Now, in this case, performance audits, as we just touched upon this, they are centered around three things. Three E's, one can say: economy, effectiveness, efficiency. So, what do you mean by these three E's? So, what is economy? It's all about minimizing the cost of resources which are used for an entity. So, that is what will be required to be evaluated. Means whether the organization is doing that in respect of its various activities. Okay. At the same time, are they maintaining the desired level of quality? Okay. Idea is to get the service or maybe the item at the best price with the desired level of quality. Okay. Efficiency. Now, what do you mean by efficiency? It's about the input-output ratio. So in case of a public spending, what will happen? Efficiency is achieved when the output is maximized at the minimum of inputs. Okay, so with the given level of input, are you able to generate maximum output? Okay, means are you working at the optimum capacity level, or input is minimized for any given quantity and quality of output? So that's one same way to look at it. Okay, so now what is the audit objective? So it considers outputs. Focus is usually on processes by which an organization transforms the inputs into outputs. So auditing efficiency embraces aspects such as whether sound procurement practices are followed or not. See, in case of government organizations, PSUs, these are generally the challenges that the auditor, or you can say the reviewer, would want to look at. Why? Because it's the public money which is, it's the public interest which is involved. Resources are properly protected and maintained. Human, financial, and other resources are efficiently used. Optimum amount of resources are used in producing or delivering the appropriate quantity and the quality of goods and services. Okay. Public sector programs, entities, and activities are efficiently managed, regulated, organized, and executed. Efficient operating procedures are used. Objectives of public sector programs are met cost effectively. Right? Now, moving further on to the third E, effectiveness. Now, what do you mean by effectiveness? See, the extent to which objectives are achieved and relationship between the intended impact and the actual output is obtained. For instance, assess whether the objectives of and the means provided, legal, financial, for a new or ongoing public sector program are proper, consistent, suitable, or relevant to the policy or not. Okay. Idea is to find out whether a particular project or a program is effective or not. Yeah. So this performance audit involves ensuring these three E's in relation to any particular function, in relation to any particular project, in relation to any particular program, or you can say in relation to the business as a whole. So that is what it tries to achieve. Clear? So now, in this case, what do you do? Now, objectives, I think we have largely understood as to what are the objectives. Now, what do you do in it? So as a first step, what do you do? You'll start with the planning. Like for any other audit, you'll also be planning for this type of performance audit. So how do you plan? Of course, for this, you need to have a thorough understanding of the entity of the program, basis which you will define the objectives, the scoping, criteria, audit approach. Yeah. So this entire audit planning, which is not about the financial statements now, which is more about those three E's, which is more about the performance of the organization, which is more about the business, you can say. Okay, the way the business is run, right? So now in terms of this understanding, you'll have to look at the documents, the policies, procedures which have been laid out. Yeah? So some of these information auditor can look at, okay, to get more and more clarity. See, for the purposes of audit, the most important aspect is about getting the clarity, or you can say understanding the requirements. Only and only when requirements are understood, or you can say the business is understood, or the clarity around the business is obtained, that is when the audit can be planned and executed in an effective manner. Otherwise not. Otherwise you may not be able to think through the audit procedures. It may become very, very difficult for the auditor to think through those audit procedures. Yes or no? Yeah. Okay, so now moving further. See, comprehensive in audit we have talked about. Now, what are the some of those issues that you examine in comprehensive audit? How does the overall cost of capital of the project is compared with the approved planned costs? Were there any substantial increases, and if so, what are these, and whether there is any evidence of extravagance or unnecessary expenditure? Have the planned production or operational outputs have been achieved? Has there been underutilization of installed capacity or shortfall in performance? If so, what has caused it? Has the planned rate of return been achieved? Are there systems of project formulation and execution sound? Are there inadequacies? Are the control measures adequate? Are there inefficiencies? Are the procurement policies adequate? Does the entity have R&D programs? Okay, so some of these points you will be looking at. Now, moving on to the propriety audit. So now what is propriety audits? Propriety is all about, in a way, verification of transactions on the tests of public interest. Okay, so now propriety is what? Propriety is that which meets the tests of public interest, commonly accepted customs, and standards of conduct, and particularly as applied to professional performance requirements of laws, government regulations, and professional courts. Now, propriety audit is very specific to PSUs, though some of these aspects now you also see in case of private companies as well. When you look at Caro, okay, so some of the aspects related to propriety you come across over there as well. So propriety requires transactions and more particularly the expenditure to conform to certain general principles. Now, what are these principles? That the expenditure is not prima facie more than the occasion demands, and that every official exercises the same degree of vigilance in respect of expenditure as a person of ordinary prudence would exercise in respect of his own money. So let's suppose there's a PSU. Okay. They have an office, they have an office building. Now what they have done is they have constructed another office building. Okay, let's suppose it's going up to 7 floors. And no usage of this audit build or office building is as defined as such. So now what will you call it as? If the management doesn't have any plan, so why did they get into this expenditure? Okay, so this sort of question may be asked. Why? Because it's all about wastage of the money. So this is what you call as propriety element. So you are not looking at whether the cost of the building is appropriate or not. You're saying cost is appropriate. This building was constructed with a budget. Quality of the construction is also all right. But what is the usage of this? Yeah. If that is of no use, then the money has got wasted. Yeah. That is what you call as propriety element. Right. So this is what is required to be looked at in respect of various aspects of the business, of the entity, in terms of various activities it will sort of perform, particularly about the expenditures which will be there in the organization. Okay. Now, when it comes to the audit report, now let's look at some of the aspects related to the audit report of CAG. Reports of CAG on the audit of PSUs are presented to the Parliament in several parts. So, introduction containing a general review of working results of government companies, deemed government companies, results of comprehensive analysis, appraisals of selected undertakings, resume of the company auditors' reports submitted by them under the directions issued by CAG, significant results of audits of undertakings not taken up for appraisal by the audit board. Right? So different mechanism could be there. Now what we will do is, now for this PSU as well as this due diligence, etc., we'll pick up some more questions. Okay. So let me just move on to the questions. All right, so let's pick up this one first. During the course of an audit of state government department, right, office of the CAG observed that prescribed law in the state defined a flat based on the following two criteria in a premises. Okay, so there's a prescribed law. Now, one must appreciate when it comes to the regulatory sort of setup. Okay, so they have some definitions, procedures. So we need to go by that. CAG has observed that there's a prescribed law that has defined a flat. Okay, what is that? Criteria is dwelling units exceeding a threshold limit, number one. Buildings with a total area surpassing a threshold limit. Now, what is that threshold limit? That is not given. However, it was noted that during the audit, relevant database did not include a column for entering the area of the building. Consequently, a certain number of buildings were identified as flats. Now, for a building, what do you need? Total area surpassing a threshold limit. So that's when you call it as a flat. Okay. But now what has happened? Certain buildings, because the field is not available. So what do? You will identify them as flats, even if they are not crossing the threshold limit. Yes or no? Yeah. In the absence of data regarding the area, audit team directed the physical verification of these flats. Yeah, makes sense. Physical verification confirmed that these buildings were incorrectly classified as flats. So the outcome is also given to us. Now, resulting in the department under collecting water charges. Now, what is it that you are required to do? Identify the type and nature of audit being performed by CAG. So that's first. So that's first requirement of the question. You are required to identify the type and nature of audit. So it's an audit. So what is the nature of this audit? What is the type? Second, to whom report of such audit was likely to have been submitted. Okay, so let's look at this one by one. In the given case, it appears to be a compliance audit. So let's understand about compliance audit. See, when you will comment on such type of audits, you will have to again, first of all, explain why you are saying it's a compliance audit. So you'll have to explain what is a compliance audit. Yeah. So compliance audit is what? Compliance audit is the independent assessment of whether a given subject matter is in compliance with the applicable criteria. This audit is carried out by assessing whether activities, financial transactions, and the information comply in all material respects with the regulatory and other rules which govern the audited entity. So that is what you see in case of compliance audit. Compliance audit is concerned with one, regularity. Second, propriety. Now, what is the meaning of regularity? Adherence of the subject matter to formal criteria emanating from the relevant laws, regulations, and the agreements applicable to the entity. So that's one. What is propriety? I think on the propriety we have discussed quite a lot. Observance of the general principles governing sound financial management and the ethical conduct of the public officials. Okay. Now, while regularity is emphasized in compliance auditing, propriety is equally pertinent in the public sector context, in which there are certain expectations concerning the financial management and conduct of officials. Now, under Article 151, what do? Audit reports of CAG. Now we are moving on to the Second part. Audit reports of the CAG related to the accounts of central state government should be submitted to President, Governor of the state, who shall cause them to be laid before the Parliament or state legislative assemblies. In the given situation, report relates to the State Department. Yeah. So that's given in the question itself. Correct. Therefore, report was likely to have been submitted to the Governor of State, to be laid before State Legislative Assembly. Clear? Clear on this? Next. Direct benefit transfer. It's a major reform initiative of the Government of India to ensure better and timely delivery of benefits from the government to the people. It marks a paradigm shift in the process of delivering benefits, like what? Wage payments, fuel subsidies, food grain subsidies, directly into the bank accounts of the beneficiaries. And thereby it also removes the leakages, enhancing the financial inclusion. Now, CAG is likely to undertake a performance audit for a block of years in a state of some selected social security pension schemes and scholarship schemes under direct benefit transfer. Now, what are likely to be the objectives of such performance audit? So that's one. Sorry. So this will be A for you. Part A. Explain the meaning of audit criteria and also discuss how these can be determined in the above case. So the likely objectives, I think, are very clear. What is that? Whether proper planning and process were in place to capture the data of beneficiaries under the above schemes. That's one. Whether necessary steps were taken for implementation of DBT, like preventing delay in payments to the intended beneficiaries and preventing pilferage and duplication. Third, whether the infrastructure, organization and management of DBT were adequate and effective. Yes or no? Yeah. So these will be the objectives always. Now, then it says, explain the meaning of audit criteria and how these can be determined in the given scenario. Correct. So let's look at this. So audit criteria are what? Those are the criteria, or you can say the standards used to determine whether a program meets or exceeds expectations. It provides a context for understanding the results of the audit. Audit criteria are reasonable and attainable standards of performance against which economy, efficiency, and effectiveness of programs and activities can be assessed. Okay. Now, in the above situation, various documents issued by the Government of India and the state government, like circulars, instructions, standard operating procedures, manuals, guidelines of schemes on identification and authentication of beneficiaries, etc., general management, subject matter literature can be used to determine the audit criteria. Yeah, clear? Okay. So now, moving further. Next. CAG appointed Verma and Associates. It's a firm of chartered accountants to conduct performance audit of MAP Limited. So what's the name of the company? MAP Limited. And what is the subject? It's the performance audit. The firm conducted the audit with a view to check all the expenses of the unit are in conformity with public interest and publicly accepted customs. So this is the checking which the firm has done. So that's one. Audit report submitted by audit firm was rejected by CAG. So please give your opinion on the action of the CAG. Interesting, huh? Right? So let's look at this. In the given scenario, CAG appointed a firm of chartered accountants, Verma and Associates, to conduct what? Performance audit. So now important part is to understand what is required to be done. What is the scope? Scope is what? Performance audit. Firm also conducted the audit with a view to check all the expenses. Okay, and to find out whether they are in conformity with the public interest, publicly accepted customers. Can you say that is performance audit? No. So I think here again, now similar to, if you remember, there was a question. In the question itself, solution is given to you. Yes or no? See, you need to understand what is performance audit. If you understand performance audit, you will immediately get to know. But see, the work which the firm is doing is not performance audit. So if they have not done the work and they submit their report, will that be accepted? Answer is no. Because if not done the work, then how can the report be accepted? So now the question arises, what is performance audit? So that's what you need to define here. Okay, that is what you need to define here. What is performance audit? What is it? What is required to be done in case of performance audit? So performance audit is what? Then you will explain. It's an objective and systematic examination of evidence for the purposes of providing what? Independent assessment of performance of the government organization. Program, activity, function, in order to provide information to improve public accountability and facilitate decision making by parties with the responsibility to oversee or initiate corrective action. So what was required to be done has not been done. Actually, the auditor has only focused on the expenses. So you can say it's more of an expenditure audit which has been done. Can you get to assess the performance of the organization through the expenditure audit? No. You need to go beyond that. See, expense is only one of the aspects. Or you can say a part of this. Performance is a wider domain which covers entity as a whole, which doesn't seem to have been done in the given case. Now, this performance audit, if you look at, it is conducted by CAG through various subordinates of CAG, which are subordinate offices of Indian Audit and Accounts Department. In conducting the performance audit, subordinate offices are guided by manual and auditing standards, which are prescribed by CAG only. Clear? Yeah. Therefore, objectives of performance auditing are the evaluation of three things: economy, efficiency, effectiveness. Remember, we discussed this, right? Performance audit focuses on areas in which it can add value, which have the greatest potential for development. Okay, so performance audit is all about, in a way, looking at those aspects which can be improved upon, right? It provides constructive incentives for the responsible parties to take appropriate actions. Regulations on audit and accounts issued by CAG lay down that the responsibility for development of measurable objectives and performance indicators, as also the systems of measurement, rests with what? Government heads or heads of entities. They are also required to define intermediate and final outputs and outcomes in measurable and monitorable terms. Standardize the unit cost of delivery, benchmark quality of outputs and the outcomes. Okay, therefore, rejection of audit report, which is submitted by this firm, by CAG, is in order. Okay, so somewhere in the solution, you also need to comment upon this. So is it appropriate? Yes. As audit with a view to merely check expenses is not a performance audit. Okay, so you can say in a way at the end you are giving a conclusion. Yeah, so that's how you will present. Clear on this? Yeah. Okay, so now moving further, so we'll look at some more questions over here. Then we can also look at some the RTP, right? So BT Limited, again a company wholly owned by the central government, okay, was disinvested during the previous year, resulting in 40% of the shares being held by the public. The shares were also listed on the BSE. Since the shares were listed, all the listing requirements were applicable, including publication of quarterly results. Okay. Submission of information to the BSE, etc. SAM, the FM of the company, is of the opinion that now the company is subject to stringent control by BSE because it's listed. So that's why BSE, SEBI, they will require a lot of information. Reporting requirements will increase. Therefore, auditing requirements of a limited company in a private sector under the Companies Act would be applicable to the company, and CAG will have no role to play. Okay, so they are saying now CAG is not the relevant party. You are required to comment upon this. So idea is in a way to assess where do you find the role of CAG. So for a company like this, in terms of the structure which the company is having, do you think CAG will have a role to play? Okay, so that's the requirement we need to comment upon. Now, if you look at the Companies Act, what is a government company? It's a company in which not less than 51% of the paid up share capital is held by central government or any other state government or governments, or partly by central and partly by one or more state governments, and includes a company which is a subsidiary of such a government company. So that's how government company is defined. Okay. And if there is a government company, if let's suppose there's a government company, so who will appoint the auditors? CAG. In the given case, can we say that this company, okay, BT Limited, is a government company? Answer is yes. Why? Because if you look at the disinvestment which the government has done, that's only 40%. Government continues to hold 60%. Yes or no? Yeah. So just to say that the company has got listed, so that's why it will not be a government company anymore. And therefore CAG will not be the relevant party anymore, will be inappropriate. Okay. Yeah. So clearly we can say that the opinion of Sam was not correct in the given scenario. Clear on this? Yeah. Okay. So now let's look at the next one. DBH and Associates are the statutory auditors of MBPC Limited. So what's the company? MBPC Limited. It's a public sector undertaking in power sector. And who are the auditors? DBH and Associates. They are the auditors. It is engaged in constructing large size thermal power stations to accelerate development of the power sector in the country. Okay. One of the financial committees of the parliament has decided to examine its physical and financial performance. It has also examined the audit findings of CAG, in respect of which action is yet to be taken by the said PSU. Committee also proposes to include in its report performance of the company in various operational matters. Which financial committee of the parliament deals with such matters? B. Outline its main functions. Yeah. So let's look at this. See, looking at the matters, what do you say? Such matters are dealt by the Committee on Public Undertakings. And what are the functions of this committee? So if you look at the functions of such committee are what? To examine the reports and the accounts of public undertakings. To examine the reports of CAG on public undertakings. To examine the autonomy and efficiency of public undertakings and to see whether they are being managed in accordance with sound business principles and prudent commercial practices. To exercise such other functions vested in the PAC and the Estimates Committee as are not covered above and may be allotted by the Speaker from time to time. So the examination of public enterprises by the committee takes the form of comprehensive appraisal or evaluation of performance of the undertaking. It involves thorough examination, including evaluation of policies, programs, and financial working of the undertaking. Okay. Now, moving further. Next. CAG has appointed a CA firm to conduct comprehensive audit. Now, please understand, scope is defined. What is that? Comprehensive audit of Saras Company Limited, a listed government company handling major railway project of a metropolitan city for the period 31st March 24. The work to be conducted under Project A, handled by Saras Company, was of laying down railway line of 130 kilometers. So the nature of the project is also specified. During the audit, firm reviewed the internal audit report and observed the shortcoming reported about the performance of Project A regarding the understatement of current liabilities and understatement of CWIP by 75.32 crore rupees. Now, in this case, What key aspects should the firm focus on? So what are the aspects firm should focus on while conducting comprehensive audit? See, considering the nature of the project and considering the deficiency or the problem which is in place. So what is it that you will do in the comprehensive audit? Now, what are the matters you will pick up? One, how does the overall cost of capital of the project compare with approved planned costs to begin with? Yes or no? Were there any substantial increases? And if so, what are those? And whether there is any evidence of extravagance or unnecessary expenditure. That's what you'll do clearly. Have the accepted production or operational output been achieved? Has there been underutilization of installed capacity or shortfall in performance? And if so, what has caused it? Has the planned rate of return been achieved? Okay. Are the systems of project evaluation, formulation and execution sound? Are there inadequacies? What's been the effect on the gestation period and the cost of capital? Okay. Further, are the cost control measures adequate and are there inefficiencies, wastages in raw materials, consumption, etc.? Are the purchase policies adequate or have they led to piling up of inventory resulting in redundancy in stores and spares? Does the entity have R&D programs? What's been the performance in adopting new processes, technologies, improving profits, reducing costs through such technological progress? If the entity has an adequate system of repairs and maintenance, are the procedures effective and economical? If you remember, in a way, it is talking about ease. Remember those three E's. Is there any poor or insufficient or inefficient project planning? Yes or no? Yeah. So these are some of the aspects you will look at. Clear? Now what we will do is, let me just move on to some more questions. So what I'll do is I'll just pick a few questions from the RTP as well. Right. So we can just go to RTP. So what I'm doing is I'm just picking up the RTP for January 26, first of all. Okay, and as the time permits, we'll pick up some more. All right, so let's look at this. Okay, so now, okay, so let's look at this question on CAG point. CAG appointed Sharma and Associates. It's a firm of chartered accountants to conduct performance audit. Now here again, scope has been clarified. I think the document is not shared. Just a minute. Now, CAG has appointed Sharma and Associates, a firm of chartered accountants, for what? To conduct performance audit. It's a PSU. Audit was conducted with the objective of examining whether all the expenses of unit were in conformity with public interest and accepted customs. However, audit report submitted by the firm was rejected. Yeah. So can you just understand? Yeah. Similar sort of question we just discussed. Clear? Yeah. Good. All right. So let's move on to the next one. During the course of audit of Limca Limited, I think this is again the one that we have already covered. Yeah. So what I'll do is I'll just move on to the next one. Just a minute. So next, I think we can also pick up this RTP for September one. Okay, so I'll pick up the RTP for September. 25. Okay, so let's look at the questions. I think we have still time, so we can just try to cover as much as possible. Correct? Just a minute. All right, so let's look at this. Okay, so let's look at this. Navyam Limited is into the business of construction. So what is the nature of business? Construction. So that's the nature of business of this company. Management of the company came to know that the building material sent to construction sites is of substandard quality. Okay. So there's a building construction or some construction is going on. So the building material is of substandard quality. Whereas the payment released by the accounts department is on the higher side. So it appears to be, sort of mismatch. Why? Because let's suppose the material which is received, okay, that has a poor quality. So when let's suppose the quality is poor, so we'll expect the pricing, let's suppose is rupees 100 for that level of quality. But when you look at the payment, you see the payment is made for the better quality product. Okay, let's suppose the payment is made for 150. Yeah, so there's a clear mismatch. One, of course, one can argue that quality is poor, but the payment is in line with this sort of material which is received. Okay. Now, forensic accountant was asked to carry out a detailed investigation. Now, because of this, it appears there is some fraud suspected. Okay. Now, forensic accountant was asked to carry out a detailed investigation. Forensic accountant completed the investigation and now is in the process of preparing the report. Now, for you as a forensic accountant, what are the broad areas of information that needs to be incorporated in the report? Understood? Yeah. So the question is not asking you as to what is required to be done, how is that required to be done. Question is asking about the final reporting. So when you report this sort of matter, wherein the work is also completed, so what do you do? So how will you put it across in the form of a report? So that's what you are required to now comment upon. Yeah. So let's look at this. Okay. So now, in terms of this final report, just a minute, I'll just get on to the solution now. So what do you do if, let's suppose, you are the forensic accountant? Right. Issuing a report is the final step. Accountant or the investigators will include information detailing the fraudulent activity, if any. Okay. Why? Because that was suspected. So if that has been detected, you confirm it's a fraud, so you'll report it. Client will expect a report containing the findings of the investigation, including a summary of evidence. Yes or no? That's why the professional or the relevant consultant has been engaged. A conclusion as to the amount of loss suffered as a result of fraud and to identify those involved in the fraud. So that's what the outcome you will want. Report may include sections on the nature of assignment, scope of investigation, approach utilized, limitations, if any, which generally are not there, findings and or opinions. Report will also include schedules, graphics, which are necessary to properly support and explain the findings, if at all those are there. The report will also discuss how the fraudster set up the fraud scheme and which controls, if any, were circumvented. It's also likely that investigative team will recommend improvements to the controls within the organization to prevent any similar fraud occurring in the future. All right, clear on this? Okay, so with this, I think we are through on this. I would request now you to just make sure that you revise it further. Yeah, okay. So thanks everyone for your time today.
Thank you, Achal sir, for the interactive session. And thank you for taking up questions. Thank you for showing RTPs and questions. Thank you everyone for your attentive listening. And I would request every one of you to please make your handwritten notes and keep doing written practice in auditing as well. Thank you. Thank you, everyone. Yes, yes, yes.